I'm going to talk today about how you take money out of your LLC, how you put money in and out of your LLC, and how the taxes work on it. Now, this isn't that complex, so I just don't want you to worry about it too much. Don't get too worried about it. It's pretty simple. You can watch this video however many times you need to get the basic concept. So once you understand what's in the video, you should be able to handle pretty much any transaction you have in your LLC. I've been doing this stuff for almost 30 years, and I know this is an issue where a lot of people get stressed about it. They get confused, and it's really nothing. And you'll pick it up, and once you learn it, it'll just become second nature. And don't feel bad when you're a little stressed about things. I mean, when you feel uncomfortable, all it means is you're going to learn something, right? So as you get good at this, it becomes second nature, and then it won't be stressful to you anymore. My name is Maurice Kempner. I'm an attorney, a real estate broker, business coach, and consultant. Welcome to True Legacy Wealth Media. The main thing to know is, well, first of all, let me just say I'm only going to talk about LLCs today that have not made an election to be taxed as an S corporation. So we're just talking about an LLC, just a plain, straight up LLC that you may have. Now, there's two kinds of those. There's a single member LLC and there's multi member LLCs. What you have to do, and I'll get into those a little bit in taxes because those are treated a little differently for tax purposes, whether it's a single member or a multi member. And I'll show you about that. But that really doesn't have a lot to do with distributions, right? So the number one thing really that you need to understand about distributions in an LLC, and this really concerns me with all my clients, I talk to them about it. It's a simple concept, but you just really need to make sure about it, is the LLC is a business entity that is created in the state wherever you're from, and it's like a separate person. Okay. Now, if there's a separate person and you had access to their bank account, you wouldn't write checks on their bank account to pay your mortgage or car payment or buy groceries or whatever. Okay. So you have to treat the LLC like that. You have to use any money for yourself out of the LLC. What you do is you transfer the money any way you want to from the LLC bank account to your personal bank account. Then you pay all your personal expenses. Now, the reason you have to do this, it's a form, what they call a form and substance law in with LLCs, right? So if you have this LLC and you don't do your paperwork, you don't keep it current, you pay personal expenses out of it, but you've got this paperwork from the state that says it's an LLC. Well, an attorney, if you get sued, they're going to try to get rid of your LLC protection. They're going to say, well, it's an LLC in form only, but in substance, it's just a sole proprietorship because the guy runs it like a sole proprietorship. That's what it does. So here's a form and substance example. So somebody says, well, this is a dog, right? And you look at it and it quacks, it floats in the water, it flies. See? Well, in form, you're saying it's a dog. In substance, it's a duck. So that's what form and substance theories in the law. That's just a way to look at them, right? And the IRS uses these theories sometimes, and also people that might sue you with your LLC. So you want to make sure you treat this LLC with respect on your withdrawals. That's why you don't pay any personal stuff directly out of there. You maintain your paperwork and you do all of that. As long as you do that, and you take the money out of there and transfer it into your personal account and then do all your personal stuff. This is the main number one thing you need to know. Transfer all the money you want to, anytime you want to, from your LLC account into your personal account, and it has nothing to do with taxes, really. It's just a cash flow issue, is how you look at it. You want to have cash flow for your business, right? So you can just run that however you want to, but just keep them separate. Don't do personal things in the LLC account. Now it's okay for you to pay yourself whatever you want to out of the LLC because you're the owner. I mean, it's there for your benefit, but you still need to respect it and keep it separate. Now another thing you can do is if you have certain expenses that you pay for out of your own pocket on behalf of the LLC. So let's say you drive your car, the LLC can give you reimbursement, or let's say you have a home office, The LLC can write checks for reimbursement, and those can be distributions. They'll just be deductible on the tax return as a business expense. It doesn't really matter that they were distributed to you or not. You don't even have to distribute to yourself any money for expenses you personally pay for out of your own pocket like that. And some of these things are unavoidable. So, like if you have a car, that's your car, and the LLC pays you a reimbursement for driving for the business, that's a legitimate business expense that can be deducted on the LLC and paid to you as a reimbursement. That's not going to be taxable income to the LLC or you. So that's another kind of distribution you can do. Now, a lot of people will talk to you about this about taking too much out of the LLC. Well, I think they're making a lot to do about this, maybe a little bit of clickbait or whatever. But I mean, so let's just say this LLC is a side gig. This is where a lot of the people I deal with, they have that. And let's say they have $100,000 in the account, and they take 90,000 out. They write a check for $90,000 from the LLC account, or they just transfer it to their personal account. That's $90,000. Well, it doesn't have anything to do with taxes or not. And we'll talk about taxes in a minute. I'm getting there, but now there's only 10,000 in the account, right? So let's say some business expenses come up, and let's say these business expenses are going to be 15,000, and you've only got 10,000 left in your account. Well, you can transfer money back in. You could put money back into the LLC from your personal accounts. You just put it back in there. That doesn't mean it's taxable. It's just money you've invested in there. Okay, and I'll get to taxes in a minute. It's just an investment you made. It's not taxable income if you take it back out again. The money you take out of the LLC account has nothing to do with your income taxes. So if you do take out too much, you can always put money back in. You just need to make sure that you're going to have this money to pay your expenses or whatever. And maybe you take a bunch of money out and then you know you're going to put it back later when certain expenses come due later. You can do that. That's perfectly fine. Now, how do taxes work? So the way the taxes work is the IRS, it's a federal agency. It's a bureaucracy. And the same with the state tax agencies, right? They're taxed. Their job is to tax income. Okay. Now, some states consider an LLC to exist for tax purposes, but others don't. The federal government, the IRS, as far as they're concerned, an LLC doesn't exist for tax purposes. If you have an LLC, they say, well, that has nothing to do with taxes. That's the way the IRS looks at it, right? Now, what are other reasons besides taxes that you would have an LLC? Well, for asset protection, and we'll talk about that in other videos. But there's other reasons like that. But really, taxes, there are no extra deductions you get for having an LLC. Let me just be upfront about that because there's a lot of misconceptions about it. You don't get extra deductions. The only extra deductions you get for the LLC are the extra expenses you have for having an LLC. And really, that just is an extra expense you have that reduces your overall bottom line. So you need to have other legitimate business reasons for having an LLC. There's really no special tax deduction from an LLC. That's just kind of a common myth out there. Getting back to this issue that I was talking about with the IRS not recognizing an LLC, if you're a single member with the LLC, you're just the only owner. The IRS looks through the LLC as though it doesn't exist and it sees you there, right? So if you're running some kind of a business, then it figures, well, you're just a sole proprietor for tax purposes and it taxes you like a sole proprietor. And you put your income and expenses on a Schedule C on your personal 1040. That's how that works. If you have rental properties and you have an LLC, then and you're a single member LLC, it just goes on your Schedule E for rental properties on your personal 1040. Okay. Now, let's say you're a multi-member LLC. You got these different people and everything in there. Well, then the IRS looks through the LLC and says, oh, there's a bunch of people here. This is a partnership. Then you file a partnership return. That's a 1065 tax return. And whether it's a business or a rental property or properties, those things just go on the appropriate places on the partnership tax return. So that's how the IRS looks at that. Now, the other thing is I want to make this really clear because a lot of people get confused about it. Is it doesn't matter what you pay yourself out of the LLC for tax purposes, or what money goes in and out of this account for tax purposes, right? So let's just say that you have this LLC and you make $150,000 and you have $50,000 in expenses. So now you have a $100,000 profit. Well, they're going to tax this $100,000 profit whether you take it out of your LLC bank account or not. They're just going to tax it. Now, the taxes on that are personal to you. It's not the LLC that pays the taxes. The LLC is what the IRS calls a pass-through entity. So you're going to get a K-1 form from the LLC, and it's a multi-member partnership K-1. If it's a single-member LLC, you're not going to get a K-1, right? Because it's not going to go on a partnership tax. If it's on a partnership tax return, you're going to get a K-1. It's going to show your share of the profits, and then that just goes on your personal. It's just a bottom line amount. It goes on your personal account. But this has nothing to do with the money that you took out of the LLC account. Okay. So now we've got this example where we had a $100,000 profit. We distribute another, let's say our taxes are going to be 30,000 federal and state taxes. So we distribute another 30,000 to your personal account. And there you pay the taxes on your personal tax return, either for your K-1 if you have a partnership LLC, or just on your other schedules if it's a sole proprietor. You pay the taxes, you owe the taxes, not the LLC. The LLC doesn't pay taxes. Some states have some taxes on LLC, but the IRS doesn't. So now you got $70,000 left in your bank account, your LLC bank account. Now let's say the second year comes by, the same thing happens. You make 150,000, you have 50,000 in expenses. You end up with a $100,000 profit. You paid $30,000 in taxes. And so you got the 70,000 that you made in year two is still in your bank account with the 70,000 you made in year one. So now you got $140,000 in your bank account. Well, if you go and you just say, well, I'm just going to take all this money out, if you take this $140,000 out, it has nothing to do with your income taxes. You already paid the taxes, and they don't care whether you took the money out or not. So you can take the money out whenever you want to. Okay? Now, sometimes when people have a lot of self employment tax, they'll make an S election if it's appropriate on their LLC. I'll do other videos on that. That's not what I'm talking about here, but just in case you're wondering, that can reduce some of your self-employment taxes. Because when you have an LLC and you have a business, now this isn't the same for rentals. Rentals aren't charged. Income from a passive investment like a rental are not subject to self-employment taxes. So this is Social Security and Medicare tax. It's 15.3% they're going to charge you in addition to federal and state income taxes on your LLC income if you have a business or you work in it, and that's your share. They're going to charge you that. So some people will make an S election because it can reduce those taxes. I'll talk about that in another video that has to do with S elections. But your taxes are paid on your personal 1040 tax return. That's where they're paid on the LLC. That's where the taxes are paid. You distribute the money to pay the taxes from the LLC to your personal account, and it's a personal expense, just like other personal expenses. It's a lot to take in, but it's not really that much. I mean, it's only taken me a few minutes to tell you about it. If you just take the time to go over this and look at it, if there's a few questions, I'm sure you can find some answers. And we talk to our clients all the time about this and help them understand it. So I think this is going to give you basically the foundation you're going to need to understand this and be able to work with it. And I think it'll help you a lot. And that's what I hope. I hope it did help you. Now, if you like this video, then I hope you'll like and subscribe. If you have any comments that might be helpful to help us with other things we might talk about on this issue, these issues that you would like to hear about, I appreciate your comments below. So anyway, please like and subscribe, like the video, and thanks for watching.